What's happening, crypto enthusiasts? Welcome back to Bitcoin Bulletin, your absolute go-to for the pulse of the digital asset world. The markets are absolutely electric right now, and the news cycle is moving faster than a lightning strike. We've got a packed show today, bringing you the must-know updates that could shape your portfolio. Get ready, because you're about to dive into the most critical information hitting the wires. We're talking massive market shifts, intriguing investor behavior, and key economic indicators that you absolutely cannot afford to miss. Stick around, because this is the intel you need to stay ahead of the curve. First up, we're diving into a fascinating analysis of Bitcoin's potential breakout, looking at how a gold-led bull market might be the catalyst we've all been waiting for, blending technical signals with powerful macroeconomic forces. Then, we're examining the latest sentiment data. Is the crypto market finally ready to ride the wave of global risk-on fever that's gripping traditional finance? We'll break down the indicators and tell you what it means for your favorite digital assets. And that's not all. We've got a surprising look at institutional capital reallocating and a deep dive into whether Bitcoin's recent bounce back is a sign of renewed institutional trust, or if there are still lingering doubts. Plus, we'll wrap up with a crucial look at what's driving these moves and where things might be headed next. You don't want to miss a second of this. Make sure you're subscribed and the notification bell is on so you never miss an update. Let's get into it. Bitcoin's golden opportunity. Get ready to explore a powerful narrative shaping the future of digital assets. We're diving deep into how Bitcoin might be poised for a significant breakout, driven by a confluence of technical indicators and a broader macroeconomic environment that's increasingly favoring gold-backed assets. This isn't just about price charts. It's about understanding the underlying forces that could propel Bitcoin to new heights. We'll dissect the technical signals that suggest a bullish trend is building, analyzing patterns and indicators that seasoned traders watch closely. But the real story might be in the macro picture. As global economic uncertainties persist, gold has traditionally been seen as a safe haven asset. Now, imagine that safe haven sentiment extending its influence into the digital realm. This report examines how a gold-led bull market could create a ripple effect, drawing in capital and attention towards Bitcoin, which shares certain characteristics with gold as a store of value. We'll explore the arguments for this correlation, looking at how investor sentiment and capital flows might shift when gold starts to shine. Are we witnessing a paradigm shift where digital gold follows physical gold's lead? This could be the key to unlocking Bitcoin's next major rally. Stay tuned as we break down the intricate dance between traditional markets and the burgeoning world of cryptocurrency, uncovering the strategic advantages that could be unfolding right now. But is this bullish sentiment universally shared across the digital asset space? We're about to find out as we investigate whether crypto is finally ready to catch the global risk-on fever. Crypto's risk-on rally is the wave here. Get ready to see if the digital asset market is finally catching the global wave of optimism. Bank of America's latest global equity risk level indicator has surged to a 13-month high, hitting 1.4. This is a big deal because it signals a significant increase in investor euphoria and a heightened appetite for risk across various asset classes, especially in the U.S. stock markets. Historically, when investors get this giddy about stocks, it often means more money starts flowing into higher risk, higher reward assets, and that's where cryptocurrencies like Bitcoin and Ethereum often come into play. Think back to 2021, when similar market euphoria saw Bitcoin jump by a massive 24% in just 1 month. The data is showing that as equity sentiment peaks, there's a strong potential for crypto markets to experience correlated movements. We're seeing this play out with a notable 15% rise in Ethereum's trading volume recently, which aligns perfectly with this surge in equity optimism. However, it's not all clear skies just yet. While the traditional markets are celebrating, crypto itself is showing mixed responses. Bitcoin and Ethereum have been relatively flat, with Bitcoin seeing less than a 1% gain and Ethereum even posting a small 0.4% decline. The Crypto Fear and Greed Index has also shifted to a neutral 49, indicating that while the extreme fear has subsided, widespread enthusiasm for crypto hasn't quite hit fever pitch yet. Traders are keeping a close eye on technical indicators like the Relative Strength Index, RSI, which is showing overbought conditions in stocks, a classic warning sign that euphoria can often precede a correction. Plus, upcoming economic data like September jobs reports and crucial interest rate decisions are set to test the sustainability of this broad market optimism. So, the big question remains: will the risk-on fever in traditional markets finally translate into a significant rally for crypto, or are we still in a cautious phase? We'll break down the indicators and explore what this means for your portfolio. But as institutions show renewed interest in Bitcoin, are they shifting their focus elsewhere? We're uncovering surprising insights into institutional capital reallocation and its impact on major digital assets. The Great Reallocation, Bitcoin to Ethereum. Prepare for a surprising development in the world of institutional finance. We're witnessing a fascinating shift as institutional capital appears to be subtly reallocating, with a notable trend emerging where significant funds are moving from Bitcoin towards Ethereum. This isn't just a minor adjustment. It represents a potential strategic pivot by major players in the digital asset space. For a long time, Bitcoin has been the undisputed king, the primary destination for institutional inflows. However, recent data suggests a growing interest in Ethereum, potentially driven by its expanding ecosystem, the success of its recent upgrades, and the anticipation surrounding its own suite of investment products. We're talking about substantial sums here, with reports indicating that a significant whale recently liquidated a considerable amount of Bitcoin, approximately $215 million, specifically to acquire a large stake in Ethereum. This single transaction, part of a broader $4.07 billion movement towards Ethereum, highlights a clear trend among sophisticated investors. While large Bitcoin holders remain relatively stable, indicating continued confidence in BTC's long-term prospects, this specific reallocation towards Ethereum signals a diversification strategy or perhaps a belief in Ethereum's near-term growth potential. Analysts are closely watching these movements, considering factors such as the increasing utility of Ethereum's network, the potential for staking yields, and its role in the burgeoning decentralized finance, DeFi, and NFT sectors. These areas offer different kinds of opportunities and returns compared to Bitcoin's primary function as a digital store of value. The narrative is evolving, and this shift in institutional focus could have significant implications for both cryptocurrencies moving forward. It raises questions about market dominance, future investment theses, and the overall health and diversification of the digital asset ecosystem. Is this the start of a new trend or a temporary market fluctuation? We'll explore the data and the potential drivers behind this intriguing reallocation. Now, let's pivot to Bitcoin's recent performance and what it tells us about trust in the market. We're examining whether Bitcoin's bounce back is a true sign of renewed institutional confidence, or if there are still underlying concerns. Bitcoin's comeback, trust in the institutions. Get ready for a crucial update on Bitcoin's resilience as it stages a significant comeback, soaring past the $110,000 mark in early September. This surge follows a period of volatility in August, where the cryptocurrency experienced a notable dip. The big question on everyone's mind is, will the institutional trust that has been a bedrock for this recovery hold firm? We've seen incredible institutional adoption throughout 2025, with entities absorbing a staggering 690,000 BTC. That's 6 times the amount of newly mined supply. Major players like MetaPlanet and MicroStrategy have been aggressively expanding their Bitcoin holdings, effectively creating a significant supply sink that bolsters the market. On-chain data paints a mixed, yet largely bullish, picture. Metrics like Delta Cap and the MVRV Z-score, which is currently hovering near 2, suggest there's still substantial room for upside without entering a danger zone. However, a bearish flag has emerged with the MVRV death cross, a pattern that historically preceded significant downturns. Technically, Bitcoin is trading within a descending parallel channel with key resistance levels to watch. While the weekly Relative Strength Index, RSI, remains neutral, the Moving Average Convergence Divergence, MACD, has shown a bearish cross, indicating a loss of momentum. Yet, bullish divergence on shorter timeframes hints at potential upward movement if key resistance is breached. Adding another layer of complexity, we're seeing interesting whale activity. One major whale recently offloaded 2,000 BTC, reportedly to acquire a substantial stake in Ethereum, as part of a larger $4.07 billion shift. While this indicates some rotation, larger Bitcoin holders appear stable, suggesting a core of institutional conviction remains. Retail sentiment, however, is showing excessive optimism, a sign that seasoned analysts often associate with potential market tops rather than bottoms. Macroeconomic factors are also in play, with upcoming U.S. jobs data and Federal Reserve rate decisions on the horizon, which could inject further volatility. Historically, September has been a challenging month for both equities and crypto. Spot Bitcoin ETFs have seen outflows, though inflows have recently resumed, suggesting continued institutional buying interest. The performance of Ethereum ETFs has also been noteworthy, outperforming Bitcoin ETFs in recent weekly inflows. Ultimately, the market is at a critical juncture. Bitcoin's ability to maintain its current price levels and overcome technical hurdles will be key to determining whether this bounce back signifies a sustained period of institutional trust and growth, or if the underlying risks will lead to further corrections. So, what's the takeaway from these diverse market movements? We'll wrap up with a lightning recap of all today's top stories and a clear call to action. And that's a wrap on today's Market Pulse. We saw Bitcoin's potential breakout in a gold-led bull market, explored crypto's response to global risk-on fever, noted institutional capital shifting towards Ethereum, and analyzed Bitcoin's bounce back amidst institutional trust questions. Don't miss out on any of these crucial updates. Hit that like button if you found this valuable, subscribe to Bitcoin Bulletin for your daily dose of crypto intelligence, and ring that notification bell so you're always the first to know. Got thoughts on these stories? Drop a comment below, and make sure to follow us on all social media platforms for real-time insights. We'll see you next time.